Hello all, it's time to study. Getting ready for general lines, life accidents and health insurance license. It's time to study. Let's talk a little bit about life insurance underwriting and policy issue. Purpose of underwriting. Underwriting, it's another term for risk selection. It's a process used by insurance companies to determine whether or not applicant is insurable or so how much you're going to pay for premiums. This is what you call risk classification. So let's go through the process. The process has application, medical report, attending physical statement, MIB, which is the Medical Information Bureau, special questionnaires, inspection reports, and credit reports. So first of all, classification application. We have like some parts of the application. Part 1 about general information, age and date of birth and all that. So that's important to have. Details about the insurance coverage about the policy, the amount of insurance, all the information. So that's the first part. So first part, general information. Second part, medical information. Third part, agent's report. So let's go back. Application. General information part 1, medical information part 2, agent's report part 3. Policies below a certain amount, such as $50,000, will not require additional medical information other than provided by the application. However, they require a medical report for further information, meaning if it's they're gonna start asking you a lot of more questions, the more money more policy they're gonna face amount they're gonna give to you. If it's a small amount, it just passes like with not a lot of major questions. Credit report. An applicant's credit history is sometimes used for underwriting and to determine the likelihood of making premium payments. And the Fair Credit Reporting Act requires the applicant to be notified in writing if there is something wrong. The concept of warranty and representation. Warranty guarantees things must be true. Representation is statements are substantially true. Medical report. Medical report is sometimes used for underwriting policies for higher face amounts. If information in the medical section warrants further investigation into applicants' medical conditions, then underwriter may need an attending physician statement, APS. Special inspection reports. This report provides information about applicant's character, lifestyle, and financial stability. They are just used for larger coverage because they add the expense to the underwriting process. MIB. MIB is a non-profit trade organization which maintains medical information about individuals. Information from MIB is used by life and health insurers. It helps insurance companies for a diverse selection of applicants. USA Patriot Act about terror risk. Special questionnaires are used for applicants involving special circumstances. Fair Credit Act just regulates the way credit information is collected. It's important to establish procedures for collection and disclosure of information. The producer must provide a privacy note to the applicant if personal information about the applicant is disclosed and passed along, and the applicant has the right to receive a copy of the report of the investigative consumer report is used. So let's classifications of risks: preferred, low risk, standard, high average risk, substandard, high risk, declined, non-insurable. So let's go back. What's the kind of processes, risk classification: preferred, standard, substandard, decline. Fielding underwriting procedures. Fielding underwriting is completed by the agent. Unlike the insurer, the agent has a face-to-face contact with the applicant, which can aid the insurance in risk selection. As field underwriters, agents help reduce the chance of adverse selection, meaning the people that are just using insurance to make some profit. Assure that the application is filled out completely and correctly, collect initial premium, and deliver the policy. Other duties include forwarding the application to the insurer, seeking additional information, notify the insurer, correct the premium, and other. Application errors. If an agent realizes that the applicant has made an error on the application, the agent must correct the information, have the applicant initial the changes. An incomplete application will be returned to the agent. The agent can never change the application without the customer present to initial the changes. Buyer's guide provides general information about types of life insurance available in language that can be understood. So buyer's guide is kind of the marketing information, general information about types of insurances. Policy summary provides specific information about policy purchase, such as premium and benefits. So buyer's guide is the overall. The policy summary is like providing specific information about the premiums and the benefits. Suitability form ensures that the customer is best suited for the policy they are purchasing. Prevents the sale of unnecessary insurance. For example, a 75-year-old customer living off of Social Security will not be suited for a single premium deferred annuity because they will be giving a large sum of cash that could live on and possibly not live long enough to collect. Suitability form. That's important to check which one will be suited. Signatures. The agent and the applicant are required to sign the application. If the applicant is someone other than the proposed insured, except for a minor child, the proposed insured must also sign the application. Incomplete application will be returned to the producer and a new one will have to be filled out. Premiums and receipts. The agent issues the applicant a premium receipt upon collecting the initial premium. We have two types of receipts. Conditional receipt. The producers issue a conditional receipt to the applicant when the application and the premium are collected. The conditional receipt denotes the coverage will be effective once certain conditions are met. So conditional receipt, you get the conditional receipt, but you will be paid only, will take an effect from the date of the application or medical exam, whichever is later. Binding receipt. Binding receipt or temporary insurance agreement provides coverage from the date of the application regardless whether the applicant is insurable. Coverage lasts 30 to 60 days or until the insured accepts and declines the coverage. Binding receipts are rarely used in life insurance and they are primarily used in auto or homeowners insurance. So binding receipt is using more in homeowners, home and auto insurance. Under binding receipt, coverage is guaranteed until insurer formally rejects the application. So conditional receipt, binding receipt. Effective dates of coverage. As explained on the conditional receipt, coverage is not effective without collection of initial premium, approval of the application, and policy insurance and delivery. If the initial premium does not accompany the application, the premium must be collected by the agent. In some cases, the insurance requires the agent to collect a statement of good health from the insured at the time of delivery. If initial premium is not submitted with the application, the policy effective date is established by the insured. In this case, it could be the date of the policy issuance or the date of the policy is delivered to the applicant, premium collected, and a statement of good health signed. Backdating, you can backdate application like the insurance is up to 6 months in order to save money. Policy delivery, policy issue and delivery. let me go back to this one. This one's important. Policy issue happens when the insurer approves the application. They are issuing the policy. So when the policy is issue, it means that the insurer approves the application. Technically, a policy could be issued and not delivered for days or weeks later. So you can approve, but you don't deliver. Policy issue. Constructive delivery. Policy delivery may be accompanied without physically delivering the policy into policy's possession. Constructive policy occurs if the insurance company intentionally relinquishes all control over the policy and turns it over to someone acting for the policyholder, including the company's agent. If the company instructs the agent not to deliver the policy unless the applicant is in good health, there is no constructive delivery. So what is constructive delivery again? Constructive policy occurs if the insurance company intentionally relinquishes all control over the policy and turns over to someone acting for the policy owner. Statement of good health verifies the insurance has not become you insured or disabled during the policy approval process. Personal delivery of the policy is a good practice and it allows the producer to explain the coverage to the insured, such as riders, provisions, and options. Personal delivery also builds trust and reinforces the need for the coverage. Also, all the following acts can be considered means of delivery: mainly policy to the agent, mainly policy to the applicant, and agent personally delivering policy. That's mostly it. We finish our time of working on life underwriting. Have a good luck. Have you enjoyed our content? Insurance Nation is a website a location that I created in order to find some content, in order to help you to pass the insurance, general lines insurance test. If you have enjoyed our content, please join us on YouTube. We'll always be able to just add more content down there. We'll be able to just provide some real examples, go to websites, and at the same time, we want to hear from you. If you want to have any questions or something that you have some questions about the test or something that you'd like for me to place it on this website, please let me know. I will be glad to help you out. Go to Insurance Nation at ideanaso.com and feel free to provide any kind of donation of any size. Thank you, and see you next time.